webinar. I would like to welcome you to this webinar on embracing digitalization of remittances in Africa, organized jointly by OSAA and IFAD. We have an exciting agenda before us. Our webinar is structured as follows. After the opening session, we have a brief presentation on the key findings of OSAA's policy paper on digital remittances in Southern Africa, in Southern and Eastern Africa, from transaction to transformation. Then we'll move to the panel discussion, followed by Q&A. Since this is an online event, I want to announce the following. One, simultaneous interpretation is being provided in English and French, and participants can speak and listen in either of the language. You can listen by going to the language selector and select your preferred language. When given the floor, please speak slower than normal to aid interpreters' hearing due to possible echo or delay in sound transmission. Speak directly into microphone without turning head and avoid moving microphone. Mute the microphone at the end of the intervention. Pause briefly after each speaker before giving the floor to the next delegate. There may be a slight delay due to the length of interpretation in different languages. Silence all sound notification during virtual events. Use Ethernet connection rather than Wi-Fi, if possible, for participants joining online. Use headsets with high-quality microphones that cancel echo for participants joining online. Ensure background is a solid color and keep visual distractions to a minimum. We will keep time schedule as per the agenda to accommodate interpreters' cognitive workload. Without further ado, let's start our program. I would like to invite Mr. Jean-Paul Adam, Director, Policy Monitoring and Advocacy at OSAA, to deliver his opening remarks. Mr. Director, you have the floor.
Thank you very much, Kava. And dear friends, partners, and colleagues, I start by apologizing for my voice. I'm recovering from some flu, but I'm doing much better, but my voice is still taking some time. So thank you very much for bearing with me. Good morning, afternoon, and evening to people who are joining us from throughout the continent and beyond. And it is a great pleasure that I welcome you to this webinar on embracing digitalization of remittances in Africa. And as has already been mentioned by Kava, which is organized by the United Nations Office of the Special Advisor on Africa, or OSAA, in collaboration with the International Fund for Agricultural Development, IFAD. And I convey the greetings of our Under-Secretary General, Christina Duarte. First of all, remittances are a key component of Africa's economic and social fabric. Digitalizing remittances is a potentially transformative step to increase the reliability, affordability, and potential contribution that remittances can bring to sustainable development. Remittances now surpass foreign direct investment and official development assistance flows. According to the World Bank, Africa received almost $100 billion in remittances in 2023. However, remittances remain relatively untapped. They currently offer a lifeline for families across the continent, but could potentially be leveraged as a tool for productive and sustainable investment. Excessive transfer costs in selected corridors, reliance on informal channels, regulatory barriers, underdeveloped financial sectors, limited financial inclusion, and inadequate technological infrastructure are the main hurdles to unlocking remittances' full transformative power. However, the emergence of several African fintech companies offering convenient digital payment solutions has changed the remittance landscape in Africa. Fintech companies have been offering remittance solutions that leverage mobile technology, such as mobile wallets, mobile apps, and mobile money platforms. Mobile money providers have also partnered with international remittance hubs to ensure interoperability and connect with other remittance service providers. This enabled users to send and receive money across different networks and countries using their mobile phones as digital wallets, while increasing the security and transparency of transactions. For instance, mobile money has grown rapidly in Africa, with 169 live services and 237 million active accounts as of 2023. Mobile money transfers are on average the cheapest instrument for sending remittances compared to other channels. In fact, the cost of remitting using mobile money to Africa was around 5% in 2023, and in West Africa, it was the cheapest at around 2.5%. This confirms that digital remittance solutions, including mobile money, are making it easier, cheaper, faster, and safer for people to send and receive money across borders. They also have the potential to create opportunities for further financial inclusion in Africa. Nevertheless, several challenges still hinder the further development of digitalization of remittances, including financial literacy and preference for cash transactions. Similarly, regulatory challenges and cybersecurity issues are also critical. Currently, only 36 African countries have developed or enacted data protection laws and regulations. Our collective task today is to navigate through these challenges, identify opportunities for further digitalizing remittances, and shed light on best practices and experiences across Africa. As we embark on this exploration, OSAA and IFAD will share invaluable insights from their papers, which will further guide our discussion. I believe that it is also important that we consider this issue through the lens of financing for development, looking ahead to the 4th International Conference on Financing for Development in 2025 to fully implement the Addis Ababa Agenda. The Office of the Special Advisor on Africa has advocated for strategies that improve the capacity of African countries to mobilize their own resources. This is not simply a matter of increasing taxation. It is about deploying existing resources in the most transformative way possible, allowing acceleration of sustainable development initiatives. In accelerating the digitalization of remittances, we can contribute to channeling these resources more effectively towards sustainable development, particularly through promoting economic growth, reducing inequalities, and fostering innovation across Africa. With these few remarks, I look forward to following the discussion and to recommendations that will come out. Thank you very much.
Thank you, JP, for those insightful remarks, underlining the critical role of digital solutions to unlock the potential transformative power of remittances for Africa's sustainable development. I now want to invite Mr. Pedro de Vasconcelos, Lead Technical Specialist and Manager of the Financing Facility for Remittances at the International Fund for Agricultural Development, IFAD. Pedro, you have the floor.
Thank you. Thank you. Good morning, good afternoon for those following. I'm Pedro Vasconcelos, as you mentioned. Before everything, I would like to apologize. I seem to have seen some breakup. I believe it is in my side. So I'm apologizing in advance if there's these breakups on this digitalization event, but that's what often happens. I'm very excited to be here with all of you, and particularly our colleagues at OSAA. Now, this is a continuation, I think, of a collaboration that started long before and was, I think, highlighted during the last GFRID, the Global Forum on Remittances, Investment and Development in Nairobi last year, where a lot of these findings, including digitalization, really came into the agenda to take it away from just what are the opportunities, how exciting it can be to to mainstream this more, but also start addressing what are the challenges? How can we promote further digitalization and its benefits, not only to remittance families, but those in Africa in particular. So it's a very exciting times, I believe, because beyond these GFR ideas, you said very well, we have the financing for development now, and from after this, we would, I believe, in a few years from now, we'll reach 2030, and it would be great to have considerations about remittances that go beyond 10C, SDG 10C, about just lowering the cost of remittances, which is a great indicator to have. But the real question is, how can we get there, and how can we promote the development impact of remittances? So a lot is going to be discussed today, and we're very glad. And I think we also have other colleagues from MIFAD to share some experiences that we have. But if you allow me, I would like to take just a few minutes to set the stage again, because we talk a lot about this, in this case with Africa, but this is a global phenomenon. We're talking about $656 billion that were sent in remittances last year. These flows will increase for 2024, and so again for 2025. Literally, they've never went down, except in time of crisis where we've seen some plateau. But this just demonstrates the importance that this represents for millions of people, and many of them making migration a necessity to support their loved ones back home with these remittances that they're sent. There's a lot of interest, of course, on these flows. The aggregated numbers are tremendous. They surpass so many other flows of official development assistance, in some cases much greater than foreign direct investment. But I think for institutions like ours and for many development practitioners and governments, what we should really look is not this trillions or billions, but the $200. This is from the prism of the families that receive. What it is all about is how to maximize this 200. And that's basically what IDFAD we've been trying to collaborate and to work on, because almost half of those flows, depending on the country, go to rural areas where we believe they have the greatest impact. This is where they matter the most. This is what allows millions of families to address their own SDG, as we like to call it, of putting food on the table, paying for bills, sending kids to school. That's what these remittances do. Of course, there's some other things that remittances might be used for, as any of us in this seminar that we can consider as consumption. But the main reason why so many do so many hard decisions of leaving their loved ones behind and support them is to really address their basic needs. And this is why remittances are considered a lifeline. So when we look at these $200 and what are the issues and where are the opportunities for development, the first one is access. Many, particularly in rural areas, have an issue of receiving these remittances. We talk about the cost as an indicator of this accessibility. Well, promoting better access to remittances means less cost for those who send or those that receive, and facilitates this to have these flows in due time. And there's a lot of issues around promoting better access to rural areas. And this is where digitalization in turn can be extremely helpful in that regard, provided some preconditions, of course, like we will discuss later on in the panel about infrastructure. But we know that we are getting there in many ways, and digitalization can really simplify that. After COVID, digitalization took a big boost because the preferred choice of sending remittances had been, I'm not sure if I did cut off. Liwadin? Hello? Hello?
Yes, we can hear you.
I think, hello?
We can hear you, please. Please proceed.
Yes, so I was cut, so I saw the froze, so I stopped, so let me resume. My apologies for that. I'm trying to change the network. Okay, what I wanted to, and I will try to fix the issue, but what we realized after COVID is that digitalization really provided great help that was needed as an alternative to all the cash transfer, where people had to go physically to deposit their cash and physically to to try to cash it out. This is on the rise. Digitalization is not going away. It is in here, and it has a lot of benefits that I believe we will be discussing. And this is where I would like to stress before we start into this panel is the next after access is the use of remittances. We talk a lot about using remittances for non-productive activities. At IFAD, we believe they are very productive in what they've and SDG2 and so on and so forth. But we believe what families need is more options to use their funds. In these with financial services, I think I broke. Sorry.
You are breaking.
I am so sorry about this. I don't know what I'm going to try to fix it before the concluding remarks for sure. But what I was trying to say is that the next stage from access is the use of remittances and their linkage with financial services. And this is where the real aggregated value resides, because through the facilitation of digital tools, remittances can be linked with savings, credit, insurance, a life-changing for millions of families benefiting from these flows. And I think this is what it's all about. It is not just the fanciness of digitalization, but it is really the powerful tool that this can be to accelerate the impact and maximizing the impact that remittances can have, and to make this at reach of so many people in low and middle income countries benefiting on remittances. Colleagues, I would like to leave it here. I think we're going to have an extremely interesting panel digging more into findings. I promise that by the conclusion, I will fix the connectivity issue on my digital side. So apologies for that. But we're very excited of doing this joint event with our colleagues and good friends at OSAA. And thank you so much for being here today. Colleagues, I'll give you back the floor.
Yeah, thank you. Thank you, Petro, for those remarks that set the stage for our discussion this morning. You again underline the importance of remittances, and that these flows are even more important, surpassing ODA and foreign direct investment for some of the countries. And I also want to thank you really for your commitment to strengthening the partnership between OSAA and IFAD, and we look forward really to continue working with you in the months and years to come. Thank you so much. I will now invite my colleague, Mr. Liwadin Fleece, Program Management Officer, to present insights from OSAA policy paper on digital remittances in Southern and Eastern Africa, from transaction to transformation. Liwa, you have around 15 minutes.
Thank you very much, Gava, for giving me the floor. I'll try to be brief, and let me share my presentation.
Liwa, can you increase the volume?
Is it better now?
Yes, yes.
Yes, okay. Thank you very much. Can you see my presentation?
Yes.
Okay, perfect. So as I said, this is our latest policy paper on digital remittances in Eastern and Southern Africa. This is a paper that comes within a series of papers that the Special Advisor Office is working on remittances. And then also in the partnership that we have with IFAD, we are also trying to organize this series of webinar. So the paper looks at the digital remittances in Southern Africa and Eastern Africa sub-region. And as it was mentioned by the director in his opening remarks, Africa received around 100 billion of remittances last year. These are important flows, in many cases surpassing ODA and FDI. Northern Africa sub-region received the biggest share of those remittances, followed by Western Africa. But Eastern Africa also received around 12 billion, followed by Southern Africa around 2.6 billion. So both sub-regions, Eastern and Southern Africa, received around 14 billion. So Kenya was the country that the primary recipient of remittances, receiving around 4 billion last year, followed by Somalia, Sudan, and Uganda. In terms of the importance of remittances in the economies of the countries, the study found that 4 countries are significantly reliant on remittances. These are Lesotho, Comoros, South Sudan, and also Somalia. As we know, remittances can be sent and received through different channels, for instance, formal and informal channels, but also could be sent and received through different instruments, cash, bank transfer, and also mobile money and others. This policy paper chose to focus on exploring the role of mobile money in promoting digitalization of remittances. As we know, digital payments solution has changed the remittance landscape in Africa, but there are still some obstacles that are hindering further digitalization of remittances. And the study found that social resistance and preference for cash is one of the major issues, where cash is looked at as not only a medium of exchange, but also a symbol of trust and social cohesion. And it's the preference of cash also is linked to the informal economy prominence in many of the countries. Mobile money was the cheapest remittance payment instruments, around 6% compared to the other traditional payment system, but still above the SDG target of reducing the transfer cost to below 3%. Some of the major regulatory barriers, like the stringent barriers linked to the compliance, for instance, of anti-money laundering, the counterterrorism financing regulation. These are complex and costly issues that are still hindering the further digitalization. Also, few countries have data protection laws and regulation in place. So these issues also, if we add the cybersecurity and trust issues, where security threats and data security breaches are frequent, combined with the weak regulatory frameworks, I think these are barriers that hindering further digitalization. Also, financial literacy and access are some of the obstacles. Although we know that the population in Eastern and Southern Africa is young, but remittances are sent to elderly people, and this category have some kind of generational digital literacy gap to overcome. In terms of the opportunities, as Pedro mentioned in his opening remarks, there are opportunities linked to access, but also others to the use of remittances. One of the opportunities is further financial inclusion, where mobile money banking is really increasing. For instance, the percentage of adults having access to financial institution account has been increasing in both sub-regions. The continuous increase of mobile money accounts is pushing forward financial inclusion in both sub-region. So all the other indicators are really increasing when it comes to financial inclusion. For instance, the success of mobile money services like M-Pesa, for instance, in Kenya, has demonstrated the power of this digital solution. The same also linked to when we talk about offering more options of using remittances. The opportunities are linked to empowering microfinance initiatives, offering more options in terms of insurance and payment services. For instance, the study found that savings and credit cooperatives, in short SACCOs, mainly in Kenya, Rwanda, and Uganda, have been playing a critical role in providing some kind of remittance services. Although they're not yet licensed to play that direct remittance role, I think IFAD, a recent study showed that 25% of SACCOs in Kenya, for instance, have been offering some kind of indirect remittance services. Some of the opportunities linked to that many of these SACCOs are eager to provide direct remittance solutions that could have huge potential in terms of increasing digitalization, but still there are regulatory barriers, some of issues related to lack of technology and other hurdles to be overcome. The policy paper also identified some of key enablers towards further remittance digitalization. These are linked to the digital public infrastructure, where we are talking about the need for countries to use the opportunities of the African Digital Public Infrastructure Stack, in short, ADPI Stack. This is an initiative promoted by the United Nations, where it aims to improve actually the digital public infrastructure capacity and also interoperability between countries. Also it offers some of benefits that could reduce implementation costs, facilitate and generation of storage and verification of digital IDs, and so many other benefits linked to bridging the data gaps and streamline the AML and CFT compliance, for instance. So some of the obstacles that we identified in the study also could be overcome by countries trying to develop their DPI. So also the study found that countries in Eastern and Southern Africa are well placed to benefit from further digitalization, and IFAD Digital Remittance Readiness Index also indicates that many countries in both sub-regions are they are ready to benefit further from digitalization. The other aspect is linked to the innovative financial services. We all know that African fintech industry is experiencing a significant surge, where many countries, many tech companies actually were created and reaching around more than 5,000 companies, but nearly half of which are fintech. So these fintech have estimated revenues of 4 to 6 billion, and then the potential is huge in increase that revenue eightfold by 2025. So there are a lot of opportunities over there, but also diaspora has an important role, and I think we'll hear from the panel discussion about the role of diaspora engagement and its role in playing an advocacy for digitalization at the civil level, but also increasing the understanding and trust in digital financial services. The study ends up by proposing some key recommendations related to the need for further collaboration to build robust public-private partnerships to overcome the regulatory barriers that we talked about, but also to craft some progressive and pragmatic policies to ensure financial accessibilities. The regional aspect is also important, mainly linked to the need to harmonize the policies and also standardize some of the technological issues and regulatory frameworks at sub-regional and regional level. Also, the study recommends that countries could benefit from using the Africa DPI tool to achieve further integration and efficiency. Consumer protection was also one of the issues that the study recommends, mainly related to promoting the trust and security. This is also linked to the issue of the need for robust legal frameworks, enforce comprehensive consumer protection laws, and also data protection regulations. So all this would empower users to make informed decisions and attract more transactions through formal channels. Financial inclusion is also an important area where there is a need for simplifying the user interfaces for to be more inclusive, and also implements educational program for increasing financial access at the receiver level. The study also concludes by recommending further support for innovative business models, for instance, through the need to promote sustainable business models for digital remittances, and also inclusive financial ecosystems, through encouraging competitive pricing and market competition, but also trying to recommend to, especially to the fintechs, to use and integrate new technologies like blockchain and AI to enhance operational efficiency and security. So in short, these are the key findings of the study, and hope this will help in further discussion in the panel, and also looking for questions if there are. Thank you very much.
Thank you, Lewa, for this interesting paper, highlighting the growing importance of digital remittances to East and Southern Africa. It shows clearly that digital remittances to Southern Africa, to East and Southern Africa, have increased. But of course, there's room to further harness the potential contribution of these flows to Africa's development. You highlight a number of factors that stand in the way of fully harnessing the potential transformative impact of digital remittances to Southern Africa. One, the issue of cost. The cost remains high, averaging 16% for Southern Africa, 13% for Eastern Africa, which is above the regional average for Africa, which is around 9%, and considerably higher than the SDG target of 3%. You also highlight challenges relating to regulatory issues, the issue of cybersecurity, of course, which is also due to lack of competition among the service providers. You also highlight some of the key enablers for digital remittances, including digital public infrastructure, innovative financial services, and diaspora engagement. Very quickly, the recommendation, you highlight some of the interventions that can be undertaken to strengthen collaboration, regional harmonization of policy to facilitate the smooth flow of remittances, as well as the need to adopt consumer protection to enhance trust and confidence. So in a nutshell, those are some of the issues that I summarized from the paper. But of course, now we are moving to our panel discussion. And we have a panel comprised of distinguished representatives from government, UN system, private sector, civil society, as well as the diaspora. We have Mr. Frederic Ponsot, Senior Technical Specialist on Remittances, Diaspora, and Inclusive Finance at IFAD. Dr. Shem Oshudo, Global Chair, Kenya Diaspora Alliance. Fatuma Shamim Kavuma, Manager, International Remittances, MTN Mobile Money Uganda. Doreen Lukadwa, Head of Commercial Strategy on Africa. Alex Ochan, Head of Financial Inclusion Division Bank of Uganda. I will be asking questions to each panel member for their initial response before opening the floor for Q&A. Before starting the panel discussion, I want to remind you to please mute your microphone unless you're given the floor. Please use the chat box to pose your question. My first question is to Mr. Frederic Ponsot, Senior Technical Specialist on Remittances, Diaspora, and Inclusive Finance, IFAD. What are the main challenges for promoting digital remittances, and are there notable successes we can learn from? You have the floor, Mr. Frederic Ponsot.
Thank you. Thank you very much. That's a great pleasure to collaborate again with the office of Secretary Special Advisory for Africa. It reminds me a great discussion and collaboration in the framework of the G3. Now, to address the questions, because I think we are running a bit after time. The main challenges for the promotion of digital remittances, I would address that question along the different dimension of financial inclusion, regarding access, regarding the use and quality of those digital remittance services. So regarding the challenges that are affecting access, and most of them have been already mentioned, but as a reminder, we have the limited access point and the poor connectivity, especially in rural areas, of course. We have also the lack of digital financial literacy, especially among vulnerable groups, women and rural population. So this is important to bear those challenges in mind, because there is at the same time great potential for digital remittances to address those groups, but at the same time, there are those challenges that remains to be overcome in order not to avoid increasing the digital gap and the financial gaps that are affecting those population. In terms of the use and quality of digital remittances, there is a major issue affecting the use of digital remittances, which is fraud. So this affects the confidence in the service, especially for vulnerable population and populations that are not financially and digitally literate. So this is affecting the access and use of digital remittances. So there's a need for a stronger risk management system at service provider level, but also enhance consumer protection regulation and enhance digital financial literacy, provided either by the financial service providers themselves or by public stakeholders like a central bank in the framework of financial literacy strategy, for instance. Now, in terms of quality, there's overall a lack of customer centricity, if I may say, for digital remittances that are not really addressing the opportunity that remittance represents. They are not addressing more specifically the recipient's needs. So the recipients, they have, as you know, they have a higher savings capacity because the remittances are a secondary source of income, so they can save more. And this is what is observed in the reality. So there could be some savings product bearing interest and with specific purposes that could be linked to remittances, for instance, for children education, for seasonal agricultural input purchase, for instance, for rural population. Another product that could be linked to remittance is credit scoring based on remittance history to access small loans and also insurance services. So in terms of success, because I have to be short, I think, and cut me if I'm too long, because I have a tendency to talk too much. But in terms of example of success, we can mention some project implemented by IFAD. So in Senegal, we are collaborating with Orange Money and InTouch, which is an aggregator, to develop a network of rural agents in rural areas where there's a high proportion of households that have migrants abroad. So in 2-year time frame, they have opened more than 100,000 accounts on mobile wallets, and those accounts have been activated by receiving remittances and by so doing increasing financial inclusion in very rural areas. So this is one example. One other example is in the Gambia, still among the projects that we have been implementing in the framework of the program called Prime Africa. So in the Gambia, we have supported several mobile money providers to foster the adoption of international remittances. As you may know, in the Gambia, the mobile money is at infant stage. So people are still marked by what has been called cultural resistance and high preference for cash. So transitioning or shifting cash customers to mobile wallet users to receive remittances, this is very hard work in the Gambia. But APS, which is a Gambian money transfer operator, has been particularly successful in that regard. To give you some numbers, they have onboarded 100,000, more than 100,000 now users to open wallet and receive remittances onto those wallets. And among those 100,000 new wallet users, they have also opened 10,000 microfinance savings accounts. So APS has this particularity of being both an MTO and a microfinance institution, and they have been leveraging on their remittance customer base to transform a recipient into full-fledged microfinance customers. So those are 2 examples, and I can provide more example if there are some questions from the audience, with great pleasure.
Oh, thank you. Thank you. I have one more question, very briefly. What are the key findings from the G20 Global Partnership for Financial Inclusion report on digital remittances, and how can this inform effort to enhance financial inclusion in Africa? 2 minutes.
2 minutes. Okay, we'll be very short. And I think Pedro will also underscore those recommendations that are important. So in the framework of GPFI, GPFI is focused on, it's a global network, and so recommendations are global. But if I may focus those recommendations for Africa, I would say what is important is to develop infrastructure, so advanced payment system for instant and small payments. So this is part of what is called digital payment infrastructure, or TPI. So this is a combination of advanced payment system, digital ID systems, and centralized ID database that can be accessible for private sector, but also public stakeholders, and data platforms that allow the exchange of personal data in a very, let's say, a regulated way. So the whole environment is more conducive to have this uptake of very small and digital transaction, and also ensuring better compliance or lowering the cost of compliance. And the second recommendation I would underscore the most is at regulatory level to adopt risk-based approach for regulation surrounding money laundering and financing terrorism risk. So to lower, for instance, know your customer rules to identify the customer, and among the, let's say, the proportionate measures that can be adopted is to remove the necessity to provide a proof of address that is a major barrier for low-income customers to open transaction account, and in turn receiving remittances into those accounts. So those are the two main recommendations.
Thank you so much. I'm going to move now to Alex Ochan, Head of Financial Inclusion Division, Bank of Uganda. You have 8 minutes. What regulatory frameworks are currently in place in Uganda to support the digitalization of remittances, and what improvements are needed?
Thank you very much, and good evening from Kampala. I hope you can hear me very well.
Yes.
Yeah, it's a pleasure joining this session this evening to speak about remittances. But before I go specifically to answer your specific question around what regulatory framework are in place, I just wanted to bring a bit of context in the case of Uganda, how much important remittance is for us as a country. About 2022, when we conducted a study, we found that as Bank of Uganda, that remittances actually accounted for about 2.7% of our GDP. When I was listening to this study done, I realized a lot of common things around the issues of centered around remittances. Most of our remittances come from the Middle East, and that speaks to the number of workers moving to the Middle East and Gulf countries. Of course, in terms of channels, just like the earlier presenter mentioned, we have mobile money as the topmost, followed by international money transfer operators, as well as bank account being the last. Now, which frameworks do we have in place? At the central bank, and again, the role of a regulator is to provide an environment where the private sector of financial services providers can then provide services to the population, or in this case, those that receive remittances. Our framework is anchored around 3 or 4 regulatory instruments. One is the Financial Institutions Act of 2024 as amended in 2016, pardon me. We also have the Forex Bureau and money remittance regulations that allows the central bank to license the money transfer operators, including the international MTOs. And what, of course, more recently in 2020, we enacted the National Payment Systems Act of 2020, and it's implementing regulations. In particular, one of Regulation 29 provides for the central bank to license payment service providers or payment systems operators as to offer cross-border transactions or payments in partnership with other licensed financial institutions. What we've seen there is the growth in the number of mobile money service providers, up to about 6 that have been licensed by the central bank. And that speaks to the outcome of the study that shows that mobile money so far is the cheapest, I think, in the East African region. But that is likely being driven by the private sector partnership between institutions, say MTN and say M-Pesa, harmonizing remittance transfer cost between the two countries. What can be done and what can be improved? I think for us, we look at the law giving us an opportunity to encourage innovations, likely in the area of payments. When I look at the NPS Act, it has a provision for regulatory sandbox that allows fintechs to test innovations that could lower cost of remittances or even extend termination of remittances to the rural areas. We've seen fintechs coming to the central bank to test new and emerging technologies, like applying to tests like blockchain, with a view that this could lower the costs of transfers or remittances between countries. Thank you.
Well, thank you. The second question is, how is the National Bank of Uganda collaborating with other stakeholders to ensure the security and efficiency of digital remittance channels and improve their contribution to financial inclusion?
Again, thank you. I will speak to broadly financial inclusion before coming specifically to your question. The central bank and the Ministry of Finance took a center stage in coordinating financial inclusion initiatives in Uganda. Of course, with launching of the first strategy for financial inclusion that ended in 2022 and rolling over a second one that started in 2023 to 2028, with a vision of looking at universal access and usage of a broad range of quality and affordable formal financial products and services, which is delivered in a responsible and sustainable manner. One of the products that we focused on is remittances as one of them. This strategy is centered around about 5 objectives. In the interest of time, I won't go through all of them, but main ones are deepening and broadening usage of affordable and quality formal financial products, for which remittances is one of them. Looking at informal remittances being still prevalent in Uganda, but also issues around consumer protection and capability. But the pillars are also there that should support that. And working together, the main important pillar for us is public and private sector commitment and coordination. As a central bank, we've embraced that very well with different stakeholders, including IFAD, but also the private sector or the providers of these services. My colleague from Uganda, from MTN, will speak to collaboration between Bank of Uganda and the players through a platform which we call the Governance CEO Forum, where issues are raised around cybersecurity and what can be done around it, but also collaboration between industry players, and the payment service providers, as well as the banking sector, in trying to address cybersecurity issues in Uganda in particular. Thank you.
Thank you so much. Next, I'll move to Dr. Shem Oshudo, Global Chair, Kenya Diaspora Alliance. I have 2 questions. One, what are the key regulatory issues which affect digital remittance transfer to Kenya, and how can these be addressed to facilitate a smooth flow of transactions? And 2, in what ways can the diaspora be engaged to support financial literacy and adoption of digital remittance in their home countries?
Thank you very much. My compliments to the Office of Special Advisor and IFAD for this timely getting together. I'm delighted that we're having this conversation exactly 30 years since internet landed into sub-Saharan Africa. So it's quite opportune to look at way back where we've come from. I'm also delighted that M-Pesa mobile money that emanated out of Africa is now revolutionizing global communications. And I hope it can go more to the next level as we move into the fifth industrial revolution. Bearing that in mind, I'll take note that one of our members in Norway just completed a thesis 2 years ago that established that the remittances coming into Kenya, and this is probably true of other African countries, is only about 5 to 10%, meaning about 90 to 95% remains outside, which could be unlocked if there are enabling environments for more remittances to get into the continent. If that be true, I'm alive also to objectives 19 and 20 of the Global Compact on Migration that talked about creating enabling environments in both source and recipient countries for diasporas or migrants to contribute both ways or globally. I am hoping that this is something that regulators, governments would push for, particularly from our member states of Africa, to ensure full implementation. Perhaps unlike our brothers and sisters in Uganda, most remittances into Kenya come out of the United States. And we do know there are a number of undocumented migrants. Perhaps if work could be done on improving on documentation so that they can be more useful to both jurisdictions. Having said that, we also are alive to the fact that there is often a lot of emphasis on remittances, and maybe rightly so, but not so much on remitters, those who send. This is why we're grateful involving diaspora in this conversation. Maybe much more of it needs to be done. And I'm glad that the office, the advisor's office, and IFAD are looking into diaspora engagement. I think a little more of that needs to be done. The aspect of trust deficit is a big one. Most people don't want to send money home because they think their money is just going to be misused and squandered. Governance is a big issue, maybe not just in Africa, not just in Kenya, globally, but it's probably worse. So as Kenya Diaspora Alliance, our major focus the next 2 years is what can be done to restore trust of the diasporas to send more monies home. It's in that regard that we've come up with products working together with the government and private sector that would be attractive in philanthropy, in last expense insurance, and the like. And maybe if government had more incentives to attract diasporas to send more money, say, for example, in the diaspora bonds incentives, which I must say Kenya government is doing to an extent. We have, for example, currently a conversation with the Special Economic Zones Authority on a 2,000-acre land for diasporas to establish a factory. If more of such could be done, particularly for development, would be much appreciated. I think I'd stop at that point. Thanks.
Thank you so much, Dr. Shem, for being so concise. I'll move to Doreen, Ms. Doreen Lukadwa, VP Global Enterprise on Afrique. The first question, can you share with the meeting concrete innovative solutions that On Afrique has implemented to enhance the efficiency and security of digital remittances?
Thank you. First, I'll start with just sharing a little bit about who On Afrique is. On Afrique's vision is a fully interconnected Africa where digital payments drive economic empowerment and cross-border payments are simple to access, instant, affordable, and secure. The strides to that promised land include On Afrique's integration to over 180 money transfer organizations, banks, mobile network operators across over 40 markets, enabling over 1,000 cross-border corridors, an array of card programs and enterprises. Through a single touch point, our partners have access to mobile money and bank rails, agent networks, prepaid card options, as well as cross-border corridors that link African markets to each other, to the rest of the world, and vice versa. So in terms of enhancing efficiency and securing security for digital remittances, we are leveraging this infrastructure to facilitate interoperability between different networks across different regions for person-to-person transactions, thereby improving the efficiency of this type of funds movement. For example, an MTN Uganda mobile money customer is able to send money to an M-Pesa Kenya wallet. This also is enabled for transfers from Europe, from the US, to multiple African countries. We are also facilitating new use cases. For example, in Rwanda, we are powering a remittance for medical insurance program and exploring the innovation of other use cases with various partners like MTN that's on this call. We are providing complementary offline options in select markets. For example, in Nigeria, through our large agent network, we extend cash in and cash out points at the last mile for affordable, at arm's length convenient services for that target customer. We also provide inclusive options supporting remittances through USSD and app solutions. Up to date with global and Pan-African AML and customer terrorism financing regulations, through our APIs, all our partners are equipped with the end-to-end details for each unique transaction that they process. The security of these transactions is further enhanced by advanced encryption, transaction monitoring, fraud detection systems to protect funds, the users, and ensure data integrity. We also continuously work closely with regulators and stakeholders across the world to ensure that our solutions not only meet the compliance standards we subscribe to, but also promote financial stability. I hope that answers your question.
Thank you. The next question is, how can fintech companies like Onafrique collaborate with financial institutions to improve the remittance ecosystem in Africa?
That's a great question. I think it starts with why they should collaborate. And the question that we are continuously trying to answer as Onafrique is, how do we reduce the associated risks, costs, and time spent in getting money from one place to another across multiple jurisdictions, which factor in a range of regulation and currencies? We recognize that that answer does not sit with a single provider, but multiple players, each with their unique strengths, interoperating to drive down barriers and drive up adoption and inclusion. So to partner with financial institutions, the value proposition needs to be clear for both parties. While companies like Onafrique have a lot to offer FIs, for example, innovating value-added services and potentially new customer segments, the financial institutions in turn can enable high-value transactions for select use cases such as remittances for school fees or remittances for e-commerce that cannot be accommodated by the traditional mobile money limits. They complement with license and regulatory sponsorship across an array of geographies, which reduces, that sort of route to market or route to last mile consumer or beneficiary. They facilitate multi-market treasury services, for example, partner settlement and pre-funding, which is a key ingredient for success in remittances. They provide cash in and cash out points in areas where many service providers may not be able to reach due to costs and other reasons, for example, refugee camps, to mention but a few, and are a key enabler in markets that are bank-led, like Nigeria, South Africa, to mention but a few. I think the how will ultimately boil down to present and future goals for the money transfer organization of fintech that seeks to address or, sort of link with financial institutions. But at the end of the day, it is the aggregate volumes and shared resources that will reduce the overall customer acquisition and transaction costs over time.
Thank you. I have one more question. What are the future trends in digital remittances that you foresee, and how can African countries position themselves to take advantage of these trends for development?
So what we are seeing a lot of now is remittances for purpose. I think whenever someone is trying to send a remittance from Uganda to Uganda, usually there's a request for a reason for the transaction. So we are seeing a lot of that in terms of, switch from purely person to person for emergency, but remittance for healthcare, for education, and things like that. There is increased appetite for global companies to offer services to customers on the continent, as well as increased uptake of intra-Africa trade, which demands higher transaction volumes and limits. New use cases, like was mentioned before, digital assets, stable coin, that typically embed or sit on these rails and offer more opportunities for innovation. We're also seeing we also foresee that governments and different markets will need to start thinking about adapting their digital transformation strategies to accommodate some of these ongoing changes. It'll require a lot of intentionality around national KYC and KYB, and sharing of resources across different markets to manage the inherent risks of higher usage at scale, but also inherent risks of higher transaction limits and volumes. We think that as African markets continue to plan for this increased uptake of digital services and remittances, thinking about embedding agile processes and frameworks to facilitate fast-paced nature of these changes, increased partnership between financial institutions and fintechs to provide unique and strong value-added services for these different use cases, but also reducing the cost of service. We see a lot more regional switches coming into play across different parts of the continent, and that is going to play a key role in reducing cost, but also promoting standardization of customer experience and policies. I think in sort of summarizing that, I would say that, regulators are starting to take a keener interest in remittances. So we are getting a lot of requests and seeing a lot of requests for additional data as they get closer to this. And ultimately, migration flows due to political and economic instability will continue to dictate the weight of inbound or outbound flows, and will be an important metric for different markets to observe as they forecast. So those are some of the things that we see cropping up, and a lot of opportunity presented therein.
Certainly, a lot of opportunities. Thank you so much, Doreen, for those insightful responses. I'm going to move to our last panelist, Ms. Fatuma Shamim Kavuma, Manager International Remittances, MTN Mobile Money Uganda. The first question, the remittance market in Africa is very fragmented, and transfer costs vary from one corridor to another. From the private sector perspective, what are the major challenges that the money transfer industry is facing to ensure the interoperability between service providers, scalability, and viability of the business in order to better serve the end users? Ms. Fatuma?
Thank you so much. Yes, thank you so much. Yeah. Good morning, good afternoon, to wherever everyone is. I am Fatuma Shamim Kavma. I oversee the international remittance and interoperability business at MTN Mobile Money Uganda Limited. Happy to be here, and thanks to the organizers of this. It's quite helpful. as we all well know, is MTN Mobile Money is one of the fastest fastest growing fintechs in Uganda and Africa at large, but also the biggest digital financial provider in Uganda. So to the question, the major challenges that we are facing to international remittances include number one, the stickiness to the traditional methods of transfer by the customers. Yeah, most of the customers in Uganda, but also Africa at large, are still stuck to the traditional money transfer methods, and that is actually affecting the fast growth. Even with the innovation that has come up, even with the number of players in the market that is growing every day, the customers themselves are still stuck to carrying cash, to actually being on flights to move money, and so many other ways, and also being able, wanting to actually receive money over the counter, and so many other traditional methods of transfers. So this is affecting how fast we actually can have this remittance business grow, no matter the innovation and the much work that is being put in to grow international remittances. The next is the wide knowledge gap. Again, it goes back to the customers. It's not so many customers in the market that actually know that we have moved from the traditional to the digital international remittance transfer methods. So if you check outside the urban areas, most of the people in the rural areas, not only in Uganda but also Africa at large, do actually not know that they can actually receive money directly on their phones, or they actually can access their monies through the web and likes of the sort. So that is affecting the trend or the rate at which the international money transfer space is growing in Africa, but also Uganda in particular. The other big challenge that we are facing is the limited technology capabilities. There are a number of players actually that want to join the remittance market. I think regulator can actually attest to that. There are so many people that access the sandbox to test out the service, but their technology capability is still low. So that is something that is really, really affecting. And I said, and from the beginning, we all mentioned the cost of remittances is still high, and it is very hard for it to go down if the number of players does not grow. But because of the technology backwardness for some of the players in the market, they're not able to be up to speed to do major integrations with major players in the market, and that is affecting the speed at which we should grow in as far as the international money transfer space is concerned. Just to touch a little bit about the regulation. I'm happy to say, from where we began and where we're at now, there's quite great improvement on the framework. The representative from the regulator mentioned, but also there are still some gray areas that need to be addressed in order to make international remittance have a very clear framework for every player to be able to understand and play on a leveled ground. So that is also still another challenge that we are facing, and above all, is a security for the players that are already in there. There is a very big issue of security that eventually brings in trust issues and unlimited confidence by our customers. So they end up, again, going back to the traditional money transfer methods and eventually affecting the growth of the international remittance space, not only in Uganda, but Africa at large.
Okay, thank you. The next question is, can you share any success stories or case studies where mobile money has significantly impacted financial inclusion and economic development in Uganda? That's the last question.
Yeah, sure. Yeah, thank you so much. And I think that comes at a time where it is very evident that MTN Mobile Money has played quite a big role in digital inclusion or financial inclusion. So as a case study we have reached out to a number of refugees, which is one of the majorly marginalized groups of people in Uganda, yet they are the biggest beneficiaries of international money transfers, especially the inbound transfers. So as MTN Mobile Money, we have organized these groups, a number of refugee communities in Uganda, enabled them access the SIM cards in the simplest way for them to actually have SIM cards, which they can actually use as a way to receive their money directly onto their phone, as opposed to previously when it was hard for them. So we have reached out to over 1,000 of them in Kampala, but also more of them outside Kampala, where we know that it's very hard for them to access services because they are not nationals of Uganda. So that comes out as a very big success story for MTN Mobile Money Uganda Limited as one of the providers in the remittance space in Uganda. Then the other, which is the great distribution channel that we have built as an institution, because of the stable and trusted platform that we have built, plus the distribution network, we have been able to enable over 300,000 customers in Uganda receive money from abroad very easily and conveniently directly to their phones, but also for them to now be able to utilize it. We have enabled quite a big number of agents across the country where they can actually access and withdraw their money and use it for any other services. We have also complemented that with additional value services that they can access. For example, if the money was sent to them for education purpose, we have enabled them to be able to make school fees payments. We have enabled them to purchase goods and services with ease. We have made life easy for them, and that comes off as a very big success story for MTN Mobile Money as a fintech in Uganda. Thank you so much.
Thank you so much for those responses. I would like to thank all the panelists for sharing their perspectives and experiences. We are time pressed, but we'll try to take maybe one or two questions from the audience. Liwa?
Yes, thank you very much, Kava. We have received a few questions from the chat box. So there is a question actually where they're asking about how the concept of remittances could strengthen youth in agri-food systems as an enabler to job creation. Maybe our IFAD colleague could address that. But also another question on the issue of the informal economy, and then how remittances could be attracted to use formal channels rather than informal channels and using cash. Also, there is another question, maybe I'll ask it later on, but maybe Frederick, if you could respond to this question. Thank you.
Okay. I will be very short. We can continue offline with people that raise the question. So on remittances and how it supports youth in agri-food systems, first of all, I would say that would not be necessarily strictly remittances, could be diaspora investment as well. But diaspora investment is a bit different. But what we can share at IFAD is an experience we had in Mali, working with a crowdfunding platform, a microfinance institution supporting youth entrepreneurs in rural areas, and they were financed by the microfinance institution, and the microfinance institution was posting the profile on a crowdfunding platform website, which in turn was financed by the diaspora. So in that case, this is more diaspora investment than remittances. But in other contexts, we have migrants abroad that are sending money to buy inputs, for instance, for fertilizer, for seeds, before the seasonal campaign, or when their family, their relative face risk. And as you know, most of the labor force in agriculture is rather young. So I would take those two examples. Now, informality, I think the question is very broad, so I don't have the whole answer, but one example I could take is to formalize cross-boundary trade. For instance, there are people that are crossing boundaries to either buy or sell goods that have lower prices than in their country, or the opposite. And instead of bringing the proceeds of those sales, they could be paid remotely, or they could send the money, and that could solve their issue of security. This is one example. So that would be remote payment and not remittances in that case. I think in the case of informal economy, we are not talking anymore about remittances, but small payments. Okay, so that's a whole discussion as such. My small contribution.
Okay, thank you very much. I don't know, Kava, if we have time for another question.
Yeah, just only one.
Okay.
Yeah.
There was another question linked to the regulatory framework that are in Kenya, for instance, to empower local wallets. So I don't know if who wants to take on that question and respond to it.
Perhaps Dr. Shem?
Yes, thanks. Briefly, just to say some actions that have been taken by the Central Bank of Kenya to license remittance operators, because traditionally they've only been the financial institutions, the banks, and then the mobile operators. But now they are the intermediaries. I think it's a positive first step, not to mention also the enactment of the data protection laws in Kenya. But I think a little more still needs to be done in the area of money as a service, software as a service, and the like, in terms of digital currencies. Some work is happening, but perhaps not as fast as needs to be done. I think that's what I would say.
Thank you. Thank you so much. Would like to take this opportunity to thank our 5 panelists, Mr. Frederick Ponsot, Ifa, Dr. Shem Oshwodo, Kenya, Ms. Fatuma Shamim Kavuma, Uganda, Ms. Doreen Lukudwa on Africa, and Mr. Alex Oshan, Bank of Uganda. Thank you so much for sharing your perspectives on these important issues. Unfortunately, time is not on our side. We need to conclude because the interpreter are leaving exactly within 4 minutes. So I'm going to invite Petro to deliver the closing remarks.
Thank you. Thank you. Just checking my sound. Do you hear me well?
Yes, much better.
Okay, I think I saved. I was trying to share something, but it doesn't work. But I would like then to recap, because in my introductory remarks, I wanted to share some of the documentations that we have also done with the G20, as Frédéric Ponsot mentioned, but also with our partners in Semfri. I wanted to put the QR codes on screen but it's not allowing me. Summarizing, I think what would be interesting to say is, again, remittances are the first financial service used by migrants and their families. It's imperative to look at these two aspects offered by regulated providers, and that's definitely an opportunity to financially include them. When we're talking about financial inclusion, or actually when we're talking about digitalization, we oftentimes think about an entire digital process. This can be a process of in the first mile, from a digital remittances that finishes in cash, or in cash at the first mile, digital at the end. Obviously, the whole idea for efficiency is to have a whole process that is being digital. The benefits of that, we've gone through this. I think through the remarks from the speakers, is the first is it's cheaper. Anywhere across the planet is the same thing. So this is a key benefit in accordance to the SDG 10C. Digitalization really supports the greatest development impact that remittances can have, particularly in financial inclusion. I think it is clear that this has been also voiced by our colleagues. The digital process can make it easier to then link this with financial services. In the end, some hurdles exist, but that it is something that can be done and create facilitation or easy of access to savings, credit, and insurance for those families that are excluded. So digitalization has that benefit. It brings, of course, more certainty around the payments, security and tracking, increased access to the service, as I mentioned, the gateway to financial inclusion, but most importantly, for millions of recipients, it also provides greater resilience. And in certain times as we are, I think this is a key takeaway to think about in terms of digitalization. Of course, we talk about AML CFT compliance. Digitalization is a great help in that sense. The financial sector integrity, transparency, it's all that we are looking for. And I think digitalization of these flows responds to those. And of course, other priorities by just making the remittances faster, cheaper, and safer to send to their loved ones. So all in all, we're really seeing that the benefits that digitalization bring, and also bringing certain beneficiaries like women and into the ecosystem, and we need to pay great attention in making sure that in accordance with the SDGs, concerted efforts are essential to make sure that these benefits reach all segments of society. So this is, I think, one key aspect. There's in one point of sharing right now before we close, there's been a lot of questions in the chat about some of the regulations. I would invite many of our attendees today to visit the portal remitscope.org. That has at least data for Africa and Latin America, upcoming for Asia. But this is a repertoire of all existing data and regulatory aspects. So I think it can address some of the questions, and also invite to and we will put it in this event information. The links to the publications that I mentioned. The G20 publication can be very informative in that. And another one that I would suggest for those, in answer to the questions that I saw in the chat, which is a publication done between IFAD and SEMFRI on the Remittances Innovation Toolkit, where we did explore a lot of digital uses and compliance opportunities that exist. I really encourage our participants to go and look it up. IFAD Remittances Innovation Toolkit, it's called. That I think will address a lot of the technical questions that I've seen. But overall, I think in my conclusions is digitalization is here to stay. The benefits that it brings to the whole agenda that involves 1 billion people, either that send and receive remittances, is fundamental. In a process of the financing for development, I think this will gain its irrespectable space. So we are really looking forward to work together and obtain more contributions to really promote the development impact that remittances can have. And at IFAD, we believe we can do that one family at a time according to their needs. So really, it's been a pleasure. and very instructive. So thank you so much for all the panelists on this, and of course our colleagues from OSAA who are the main hosts for this event. So thank you so much.
Thank you.
Thank you.
Thank you everyone for joining us, and thank you to the 5 panelists and our colleagues in IFAD. The meeting is adjourned, and also to the interpreters. Thank you so much for your support, your continued support for the work of the office, and we look forward working with you. The meeting is adjourned. Thank you. Bye-bye.
Thank you very much, everybody.
Thank you very much.